Hello, myself R. Shilpa, Assistant Professor, Department of BCom PA, PPG College of Arts and Science. Today we are going to discuss branch accounts and the departmental accounting, which are important topics in the financial accounting. As business expands, they establish the branches in different locations or divide their operation into various departments. To evaluate the performance of each branch or the department, separate accounting standards are maintained. Branch accounting helps the business to measure the profit and loss of each branch and exercise better control over the branch operations. Departmental accounting helps to compare the performance of different departments within the same organization. Branch accounts. Branch accounts is a separate unit of a business established at different locations to increase sales and serve the customer more effectively. Objectives of branch accounting: to determine the profit and the loss of each branch, to control the branch operation effectively, to measure the branch performance, to maintain proper accounting records. Types of branches. Branches are mainly classified into two: dependent branches and the independent branches. Dependent branches depends entirely on the head office for the goods, finance, and accounting. The features includes: goods are supplied by the head office, cash collections are sent to the head office, the head office pays most expenses, only basic records are maintained, final accounts are prepared by the head office. Independent branch. Independent branch maintains the complete book of accounts. It prepares by its own trading accounts, profit and loss, and the balance sheet. Dependent branch. The dependent branch is completely controlled by the head office. The feature: the head office supplies all the goods, the head office provides the fund for the branch expenses, the cash received by the branch is remitted to the head office, the branch does not maintain the complete accounting records, the major decisions are taken by the head office. The advantage: better control over the branch operations, uniform business policy, each accounting procedure reduce a chance of fraud. Debtor system. The debtors is the simplest method used to maintain the accounts for the dependent branch. The branch accounts records goods sent to the branch, cash received from the branch expenses, closing stock, branch profit or loss. Advantage: simple to maintain, suitable for the small branches, and the last one is require fewer accounting records. Stock and the debtor system. The stock and the debtor system provides detailed information about the branch operation. Accounts maintained: branch stock account, branch debtors account, branch expenses account, branch adjustment accounts. Advantage: better control over the stock, easy detection of shortage or loss, accurate calculation of branch profit, detailed information for the management decision. Departmental accounting. Departmental accounting means maintaining the separate accounts for each department within the same business. For example, groceries, clothing, electronics, and the cosmetic. So these different branch of accounts are maintained in a supermarket. Each department maintains the separate records to determine its own profit or loss. Objective: measures the departmental performance, compare profitability, improve managerial control, assist in the business for decision making. Transfer of goods at cost. Some goods are transferred from one department to another. When the goods are transferred at cost, no profit is included. Features: goods are transferred at their original purchase or the production cost. No unrealized profit arises. Simple accounting, suitable for internal control. Advantage: easy to record, avoid unnecessary profit adjustments, simplify the financial reporting. Transfer of goods at selling prices. In the organization, Goods are transferred between the department at the selling prices instead of the cost price. Features includes the departmental profit, helps to evaluate the in-departmental efficiency. Unrealized profit must be adjusted at the end of accounting period. Advantage measures easy departmental profitability, ensures departmental efficiency, helps to compare the departmental performance. Thank you.